Fair value gaps, in simpler terms to me, is an assumption, because when we see price trade into a fair value gap and we see price maybe wick into it and tap it, we assume it is going to go in that corresponding direction. Price goes up, price comes down, it trades into this bullish fair value gap, and then we assume it's going to go up. And the way we confirm this assumption with fair value gaps is like, okay, well, if we start seeing more and more fair value gaps go up and up, oh, then it got respected. I find that so stupid. Well, an inversion is invalidation of a fair value gap. Here, right, we see price go lower and the body closes below the fair value gap. Instead of wicking it or whatever, the wick can go down to here, but if the body still closes up here, then the fair value gap is considered respected. If it's inversed, right, the body closed below it in this case, therefore invalidating the fair value gap. And now that is a fact. So what I'm trying to say here is, while a fair value gap getting respected is only an assumption, a fair value gap getting inversed is a fact. We have invalidated what was previously an imbalance and supposed to support price. We assume fair value gaps are supposed to support price in this case, supports it up. But when we get an invalidation of it, it turns into a fact. We have now flipped this imbalance, and now we can safely assume price will go down now, but at least we're using a fact this time. We have inversed this fair value gap to the downside. Fair value gaps provide the foundation for the idea. You tell yourself, oh, I want to take longs, and you see price bounce off of a bullish fair value gap. That's just an idea. We're bouncing off this bullish fair value gap. Maybe you can take longs. But the cool thing about inversions is it confirms the idea. It turns assumption into confirmation. So an example would be like, price is bullish, we're trading up, and we trade down into a 5 or 15 minute bullish fair value gap. Let's say you have London highs above and you see price trade into a 5 or 15 minute fair value gap, and now you're thinking, I want to take longs. Longs are so good because we're inside this fair value gap. See, that's what a 20 IQ person would think. While as someone who seeks confirmation in life and makes calculated risk, doesn't judge the move by its appearance but by the soul. And so now we try to develop a soul for this. What does that mean? Price trades into the 5 and 15 minute, 5 or 50 minute. I like to use those best for the foundation of my trades when trading with an internal range. But we trade into the 5 or 15 minute fair value gap. I'm going to wait for confirmation. And so I find that confirmation through inversions. So after we trade into this 5 and 15 minute gap, I get an inverse out of this. That confirms that this level that was supported is now flipping order flow upwards. And we're turning an opinion into a fact. I think this fair value gap's going to push price higher. Well, how do you confirm it? Inversions. And then you see that respecting a bullish PD array turns into disrespecting bearish PD arrays. In other words, respecting a bullish fair value gap ultimately ends up in disrespecting a bearish fair value gap. Do you see what I'm trying to say here? The bullish gets respected through the confirmation of the bearish getting disrespected. And so there's an exchange that goes on there. And that's how you build confirmation. That's how you build probability in your favor. Of course, we want even more foundation around this trade, which is, if you watch the first fair value gap video, I talk about the 1 hour and 4 hour. That's very important. Let's talk about the 3 ways I use inversions. First is higher time frame. If I see, let's say going into the morning, we see that price had traded down and tapped into like a hourly bullish fair value gap. And then going into the morning, we see that we had previously inversed this bearish fair value gap. We had inversed it going into the morning. And so now it's a safe assumption because we received confirmation that after price trading down and hitting this hourly gap, and then price trading upwards and inversing this bearish hourly gap, that price will continue going upwards because what was once an opinion has been confirmed with a fact. And so now we look above. What do we have above? Oh, we have this high. Maybe we have like an unfilled 1 hour gap up here. And through other confirmations in price, I'm assuming that price is going to keep going higher. So where's it going to go? Up here. And so that's my narrative for the day. Like I believe that price is going to go higher because we tapped this 1 hour bullish fair value gap. Then we inverse this bearish gap. And now we have this unfilled gap above. That's an imbalance that price is going to want to correct naturally. And so that's what my eyes are drawn towards. So if I'm going into the session, I'd want to see like an inverse to the upside. So now you see how I use inversions pretty much in the higher time frame, right? So like if I go into the morning and I see that price is inversing, a gap here, then I'm going to assume we could be bullish if there's a reason, if there's a narrative above, right? So there's always has to be a narrative. You can't pattern trade these ideas. Now, let's say going into this morning, we saw instead that price had a bullish 1 hour gap, price respects the 1 hour, 4 hour. And then by 10 a.m., we have inversed this gap now. And so now we're thinking, where are my eyes going to be drawn towards? Well, they're going to be drawn lower, but there needs to be a narrative. Where can we go to lower? Oh, well, we have this swing low right here. Therefore, it would be valid to look for shorts. Now that we've inversed this hourly gap, we have, I don't know, fucking call it previous day low here for you shitters who like to use, previous session highs and lows and stuff. I used to pay attention to London highs, Asia high, all this stuff. If price swept it, that was like, oh my God, now I'm going to short because London high got taken. I don't think like that anymore. I literally don't. And a lot of you guys are going to disagree with so many of the ways that I think throughout this series. I'm going to show you exactly just how I think, and it's my own subjective perspective. But But let's say, you know, we just have this swing low inside of a bullish gap. And so price had once traded down to this hourly gap, and then it traded up. This pushed price up, and then we hit this bearish hourly gap, and then it sent price lower, and then we inverse this gap to the downside. And now there's so much narrative behind this. You know what I mean? We're bouncing off this hourly bearish gap, and then we inverse this. And so the most recent thing price tells us is we're respecting this bearish PD array, and we're disrespecting this bullish PD array. Therefore, we assume price will go lower. And where will it go lower? Well, it will go down to this major low. I don't care if it's previous day low, whatever. To me, that's not what matters, because if previous day low was right here, I wouldn't just assume it's going to take previous day low and then go up. I want to look at the major low, right? So I want to look at where the next low is that's going to lead price to trading into a new level, a 1 hour, 4 hour gap. So on the higher time frame, I like to look for stuff like this. Is it necessary? No, I don't need to see price inversing a gap on the higher time frame to feel confident in a bias or whatever, which I trade very reactionary. But this will help you understand when you can maybe flip a bias, right? For those of you who really like just having like a set bias, let's say you were previously bullish because we were inside this bullish gap, but then price traded up and then traded down and then inverse it. And so going into 10 a.m., since you have inverse this gap, now you want to look lower. So that's pretty much how it serves in the higher time frame. But really all you need is just to look for the most previous fair value gap that you're bouncing off. Now, the higher time frame is going to be the 1 hour / 4 hour for me. There's going to be the conditions time frame, and this is going to be the 5 / 15 minute. This is a transactional one, right? So this right here is going to be bias / foundation of your ideas. We'll just call this whole thing confirming an idea. Starts with step 1 right here, analyzing the higher time frame. Step 2, analyzing conditions. Inverses within this time frame is going to help you find your draw on liquidity. And then there's going to be your entry, which is only between the 1 to 5 minute. And in this case, notice how I did put 1-5 minute, because what I'm saying there is I will take an entry between the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. I don't care what time frame it is. If it's within those 5 time frames, I will take an entry, but I will never take an entry on the 6 minute. I will never take an entry on the 9 minute. I won't take an entry on the 15 minute. 5 minute is the highest time frame entry that I will go. And so then this is the, you know, final confirmation. And so this is how we confirm an idea. So then the conditions would be seeing something like if we're bearish, right, and we're looking to take shorts down to that low. So I'm creating the low right here. I want to see price being supported by 5 minute gaps. And so this is what's going to tell me if I even have the ability to take a trade down to this low. And now if we're bouncing off this 5 and 15 minute, this is what starts as our assumption that price wants to go lower. And so we need to see price bounce off a 5 or 15 minute. And now what we want to look for is the final step. Well, now we want to see an inversion off of that manipulation leg that traded into the 5 or 15 minute gap. We start with building our bias / foundation using inversions and or fair value gaps. And so we see that, you know, price was respecting this bearish fair value gap here, and then it inverses this bullish fair value gap. Then what does that confirm for us? That price wants to go lower. And this is our narrative. We find a narrative. We find a reason for price to go lower. We find this major low below. Then we go on the 5 and 15 minute time frame. We wait for price to tap into a 5 or 15 minute fair value gap. We're going to utilize that as our draw on liquidity condition. What that means pretty much for me is if price truly wants to go lower to here, we should respect this 5 or 15 minute, right? We should, but how do we confirm it? Through an inversion. And so then if we ultimately get that inversion off of that 5 or 15 minute gap between the 1 to 5 minute time frame, now we have confirmed the idea completely that we can short, and we have all the facts to trade from. I would put like my stop loss at this high, because since we've confirmed that price wants to go lower after price hit this 5 and 15 minute gap, that means I assume that this high is protected until a narrative or objective has been met. And so until price hits this low, then, you know, I should anticipate that price should not go back to my stop loss. But once this low gets taken, now I can expect that price will go back to that stop loss. So obviously I want to be taking profits and shit. That's pretty much like how I use inversions. I guess I didn't really specify in the 5 and 15 minute time frame, but in this case, right, for the 5 and 15 minute time frame, what this tells me is that in this case it got supported. But let's state the case where this gap doesn't end up holding and we inverse a 5 or 15 minute. Well, now I'm no longer looking down here, which was like our narrative where we thought price wanted to go to. Now that this has been inversed, I'm assuming price wants to go up to this high, right? And here's where it's going to get kind of tricky, but it's very simple. If the structure is good enough, you could theoretically just take the entry off the 5 minute getting inverse to the upside. But if it's a 15 minute, you can't enter off that, right? But anyways, I'm not trying to confuse you. Point is, this gap, which we want to see get respected, if it gets inverse, we are now no longer looking lower, and that is not the narrative. We are now looking higher, maybe at this internal high, whatever's above us. And so then we want to build confirmation that price wants to go up there, right? And so you would use these same ideas to build that confirmation that price wants to go upwards, again, from the beginning. Now, what I want to get into is the importance of structure with inversions. None of this matters. No inversion matters if you don't have good structure. Now, what do I mean by that? The same way I said in the Fair Value Guy video that this is what bearish price action looks like, this is good structure. And so when we want to long off an inverse and take a long upwards here, we need this type of clean structure. Because if we're trying to take an inverse off some shit like this where price just shot down and we're taking the first inverse to the upside, we're going to get smoked 90% of the time. So you don't want to pattern trade just the first inversion, you want to build structure. You want clear manipulation legs. Look at these clear legs. And so now look at something like this. People here, they see price shooting lower. You know, they try to build that idea, right? Where at the moment, price was inside this bullish hourly gap. So we have something that we're bouncing off of. We had swept out this low. Pretty much at the time, price had been right over here. We had been inside this 1 hour gap. We had taken out the low inside of it too, and we had been holding it, right? As you can see. And people this day, a lot of people took this 2-minute inversion. Now, why did people take this? Because they pattern trade the idea of inversions, right? They just take the first thing, in this case, to the upside because they want to get in early and all this stuff, but they don't have good structure. And without good structure, you will not get good confirmation with inversions because it is so necessary that there are clear swings that price can go to. So in this case, what does this look like if I turn this shit into a line chart? Probably like straight ab. This is straight ab, bro. This is straight dookie flakes. If we're going to take any sort of inverse, we're going to want to see at least a clean leg form, something like that. Because then we have this clean high, we have our clear manipulation leg, and then we can use those fair value gaps that we leave behind because this is such a powerful leg. We're most likely leaving behind 5-minute gaps, 15-minute gaps, 50-minute fair value gaps. And so the same way we use fair value gaps to support a trade idea, we use them as targets as well because we anticipate the price wants to go back to them. And so notice how everyone who's taking the entry off here just because they're pattern trading the idea, okay, we had this 1 hour gap and now we're getting the inverse of the upside. Well, buddy, you're going to need a little bit better structure than that. And so then immediately what happens is price shits the bed, goes lower, and now what do we generate? Clean structure. We resweep this low. Now we have this clean internal high, and then we get a clean inverse to the upside. Right here, we get this beautiful 3-minute, and this plays out wonderfully. Now what's happening is we're respecting bullish gaps, disrespecting bearish gaps in this case. We're trading a complete counter trend trade here. And so this one's not using a 5 or 15-minute gaps as the support within the range. But let me show you how we're using 5 and 15-minute gaps in this case. So because we're anticipating now price to go higher because we're bouncing off this hourly gap, and now we have good structure and we're getting a clean inversion to the upside, we look for those 5 and 15-minute fair value gaps again. And so here I find this 15-minute gap. Okay, cool. So I know once price trades into this level, which I have marked out with a line right here, that we are now inside a 15-minute fair value gap. And 5 and 15-minute fair value gaps are so important because that's what's going to determine where the best inverse is going to come out of pretty much when we're not taking counter trend trades. And so price trades up, we hit TP, we aim for about a 101 here. Realistically, we'd want a TP at the 5 or 15-minute gap in this case, but because we didn't have 101 in this case, we wait until 101 and then we take profits. So let's say we take profits around here. We cannot assume that price is just going to run through this 15-minute gap and go all the way higher, right? Because now we are inside what I call a condition. What this condition tells me pretty much is that whether or not price goes lower here, if we get an inverse off this 15-minute, then we can assume price will want to keep dumping. I'd want to see, you know, price present some sort of shorts. But the problem here is that we have no good structure to short yet. There's no good structure here. So we don't want to take shorts off a bunch of chop. And so that's something that you want to learn. That's something you want to get in the habit of, avoiding trading within chop. In the next day, which is Friday, we do our basic analysis. We're going into the morning, and what do we see? We're bouncing off an hourly fair value gap. What do we also notice? Not only are we bouncing off this hourly gap, we have also inversed this gap to the left. So utilizing inversions, we can see that price is disrespecting bearish PD raise and respecting bullish PD raise. So what do we anticipate? That price wants to go higher. And so now let's find an entry, right? We have the foundation, we have the bias being built, but now we got to find an entry towards those levels. And so what do we look for? We look for those 5 and 15-minute gaps now, which is on the lower time frame pretty much. And then I see, okay, well, we're bouncing off that hourly gap and we're also bouncing off of these 15-minute gaps, these 5-minute gaps. I'm going to utilize this as my draw and liquidity finder. I'm going to set these as my conditions. And so what this tells me is that if price holds this level, then I will continue feeling confident in longs. But if for some reason price comes down and inverses this level, now I will look for shorts and my focus won't be above anymore, but it will be below towards this LR, right? So we have something separating two drawn liquidities. We do that by using 5 and 15-minute gaps. And so in this case, this is our condition. This is a 15-minute gap, which we will utilize to separate two potential ideas, whether or not we long up to up here or whether or not we short to down here and hit this LR. And so now let's show you this whole trade idea top to bottom. We hit this 15-minute condition. We assume that this should get respected, but we need to confirm it through an inversion. And now we see that after price hits this bullish 15-minute gap, we're now inversing this 1-minute bearish gap. And so what does that tell us? We're respecting bullish PD raise and now we're disrespecting bearish PD raise, confirming and flipping order flow upwards. And what are we going to use 5 and 15-minute gaps for? Well, we can either use them as a part of like the foundation of our trade, or we can use them as a target. And here we have an unfilled 15-minute gap, so our eyes will be drawn there. We will take the trade pretty much like this, but we also have a 5-minute gap right here. So we want to make sure that when we are inside 5 or 15-minute gaps, we either want to be taking profits or be break even because we don't have good enough RR yet. In this case, price is pretty close to the 5-minute, so we enter here. Once it hits this gap right here, this 5-minute, we want to be break break even. In an more ideal, I guess, market conditions, this should be further or at least 101 away, and you can take profits immediately or take profits when it hits rather than like having to go break even pretty faster because it's relatively close. We can't just assume price will run through these 5 and 15 minute fair value gaps, right? So once we're inside them, we want to be taking profits as long as we have 101. But anyways, price ends up hitting this 15-minute gap, and now I can no longer assume that price wants to go higher unless given more confirmation. And so we took this long, we took profits here, and now how do we know if price is going to go higher? Well, we're going to have to find a new 5 or 15 minute fair value gap and see how price reacts off of that. And so now we find a new one. This is the most recent one that has opened up, and so this is a 5 minute now condition. And so what this tells me is that if price trades lower and respects this 5 minute gap, and then we get an inverse out of it, I can take longs because there's still reason for price to go higher. We have this high, we have this high, and we have this higher time frame narrative. So I could still take longs if we get confirmation again, right? It's almost like we're playing chess. We're waiting for price to create openings and for us to capitalize on these openings. So we can either take longs if confirmed off of this 5 or 15 minute gap, or if we inverse this 5 minute gap, we are no longer focusing above and we are now back to focusing below, which we have this low and we have this LR previously. So then we can look lower if this 5 minute gap gets inversed. And so what would that trade idea look like there? Well, we're bouncing off a bearish 15 minute gap and we would be inversing this 5 minute gap. But this 5 minute gap is going to be what confirms whether or not we are going to go lower or not, because we're respecting bearish here and we want to see bullish get disrespected. So we use fair value gaps and inverses. So it's like a team effort here. Back to this. So if we want to go higher, we want to see this get respected. Price ends up inversing it to the downside. So now we're no longer looking above. We don't care about these draws, which we thought price was going to go to. And now we're focusing lower because this 5 minute gap has gotten inverse. And if you remember in the beginning, I put that the 1 to 5 minute time frame could be used as an entry. But the cool thing about the 5 minute is it also works as like a condition too. So you can take inversions off of 5 and 15 minute gaps, right? If like price trades into a 5 and 15 minute gap and you get an inverse out of it, you can obviously take that, but you can also take inversions of 5 minute gaps. So if you were bouncing off a 5 or 15 minute gap, but you inverse a 5 minute and you also inverse a 5 minute gap, you can take that inverse as well. You just can't take 15 minute inverses. So in this case, we're bouncing off that 15 minute gap and we're inversing this 5 minute gap, and we have this clean leg. We have clean structure, very important. We can assume now based off of an opinion, which turns into a fact, that price wants to go lower, and we can form a trade idea like this. Stop loss at the high, TP about 1 to 1 here, and bang, nicely done. That's pretty much how I use inversions and fair value gaps. I can't just teach you inversions without also elaborating on fair value gaps. It's really important that I show you how they work hand in hand. But the way you have to think about it is that an inversion is what confirms an idea pretty much. Everything starts with an idea. If we're bouncing off this 1 hour gap, and then we're bouncing off this 5 minute gap, how do we know if price wants to go higher? Well, we confirm it through an inversion. Something I kind of forgot to mention is that it's also pretty important you get in the habit of using the highest time frame inversion. So let's say we grab a leg like this, and it's annoying. Sometimes you don't have to, but if you do use the highest time frame inversion of the manipulation leg, you will have a higher win rate for sure. But in this case, right, let's say we want to take longs because we have all this LR generated. We tapped back into the 15 minute gap from earlier. And so now we want to take an inversion to the upside. We have these fair value gaps here, and this is getting inversed. Well, we can't just take, the 1 minute to take the 1 minute. That's something you can do later down the line if you build discretion. But as far as being mechanical and just getting better at what I'm telling you, it's important that you just get in the habit of taking the highest time frame inversion of the manipulation leg. So if I look at this leg right here, top to bottom, this is the manipulation leg. Like the trade's lower, it takes this low and taps back into the 15 minute. And I go on the 1 minute. Well, the 1 minute has this bearish gap and it has this bearish gap. But there's also the 2 minute time frame, and the 2 minute time frame has this bearish gap. So there's a bearish gap on the 2 minute time frame as well. But there's also a bearish gap on the 3 minute time frame. And there's also a bearish gap on the 4 minute time. But there's not a bearish gap on the 5 minute time frame. So the highest time frame bearish gap here is the 4 minute. And so for me to confirm that price wants to go higher, I need to see the highest time frame gap get inversed. And why is that? It's because you can't just enter off a 1 minute inversion off like this and assume that the 3 minute or 2 minute are just going to get inversed, right? Now you're inside another gap. We don't trade off assumptions. We trade off of facts. Unless you're me and you get a bit better, then you can identify when market conditions are so good that you don't have to wait for the highest time frame. But for your case, you always wait for the highest time frame. So we wait for the 4 minute, and yeah, the close is shit. But I always say you're not focused on aesthetics. You're focused on facts. And I really hope that gets engraved in your brain. And so, we have our first target right here. We'll break even here. There's another target right here, but we want to get about a 1 to 1 in this case, which is right here. And so I don't want to elaborate too much on like the highest time from inverse shit, just because I kind of want you to like develop your own style. But it is really important that you really start by taking the highest time from inverse, because that is how I got so good at all this shit. Then you can obviously see that we go higher here and bang. And so that's how you turn an assumption into confirmation using fair value gaps paired with inversions.